Hello everyone, today is Friday, June 5th, 2020. My name is Evan and welcome back to another market recap video. In part one, we're going to talk about what went on in the markets this week. We're going to look at everything from performance to market internals, sectors, and volatility, pick apart everything that happened and try and highlight some of the things that stand out. And then in part two, we're going to jump into the charts. We're going to put everything into context. We're going to look at longer term trends and some of that individual price action. So we got lots to cover today. Let's jump right in to what happened this week. Couple of standout headlines here. NASDAQ hitting new all-time highs. And remember, this is all-time highs. This isn't just going positive on the year. We have entirely recovered from all of the swoon of the first quarter, and the NASDAQ is currently making new all-time highs. TLT and UUP. So this is the long bond and dollar, and really it was bonds right across the duration. All of those fixed income bond market really taking it on the chin this week, melting down. Rates popped very strongly this week. The dollar melted down. So a couple of things we want to talk about there and highlight, because some of the biggest moves we've seen in those spaces in quite some time. And we continue to see the beaten up sectors squeeze higher and push this market, push the averages to new highs. So let's jump into some performance numbers here. We're looking at U.S. equity. Well, we're looking at U.S. and world equities. But if we start here from the S&P 500, this right-hand column here, up 5% on the week. So a monster week for the S&P 500. NASDAQ up almost 3%. The Russell 2000 up nearly 8% this week. And same goes for the world. So ACWX world, which is everything, all U.S. All equity markets outside of the U.S. up over 7% this week. So both the Russell and the ACWX there standing out, showing 7 to 8% performance, certainly helping fuel the risk-on rally this week. Now, if we break things down and we look at market internals, so we try and get a sense of what is the general stock doing out there, what is the average stock doing, and look at a more holistic view than just market cap weighted averages, things looking quite good on this front as well. So if we look at this top row here of stocks hitting new 52-week highs minus lows, you can see some good numbers there, some strong double-digit numbers. 247 net 52-week highs made this week. That's a pretty strong number. That's an increasing number, and that's the important stat here. Is week over week, we've seen this continue to grow to the upside. So that speaks well to kind of the broad market strength. If we look at the second row here, is just the AD line, so the number of stocks advancing or declining on the day. You can see over the course of the week we had 7,000 net stocks advancing. So again, a good strong number there, which basically just says that there were lots of stocks moving this week to the upside, supporting this rally. And if we look at our stat here on the percentage of S&P 500 stocks above their 20 SMA, we were in the 90s all week. You can see 94 to 92. Basically, again, everything moving higher here and helping support this rally. Now, if we get into some sector performance, let's take a look at that right-hand column here. This is the 1 week change. So we're sorting by strongest performers down to the weakest performers. And you can see to the upside here, the number one is energy, up almost 16% this week, a massive move for that space, followed by financials up over 12% and industrials up over 10%. Those are huge moves, especially financials up 12%. And if you recall, these are basically the three areas of the market that you absolutely did not want to own or touch in the first quarter, because they were completely crushed and really sold off the hardest. And now they are coming back and rebounding the most aggressive here in the in kind of the late stages of this recovery here, I would say, in a shorter term duration speak. On the downside here, we have healthcare, we have staples, and we have utilities, all positive, but 0 to 2.5% to the upside this week. And this is really speaks to, the defensive areas. These are the quintessential sort of defensive lower beta areas of the market. And you essentially had just the thirst for risk this week with energy, financials, industrials at the top and the defensive near the bottom. Now, if we look at volatility here, volatility also improved greatly here. The entire curve lowering, coming down right across all durations. So the spot VIX here closing around 24, lowest level we've seen now in a few months. And we stubbornly, kind of resolved that sideways range, the upper 20s near that 30 magnet to the downside. Notice we're not completely back to the Goldilocks sort of 15 VIX like we had, back in, 2017, 2018. But we certainly are getting to a more normal VIX environment. It's still elevated, and that still suggests that there are certainly risks out there, and partly speaks to the volatility and the ranges that we've been seeing. And those ranges have been mostly skewed to the upside. So VIX, though, across the curve here, coming down below last week's levels. That's encouraging. If we look at credit markets this week, plenty of liquidity continues to flow here. Junk up 3% this week, which is a big move for that ETF. LQD up a little bit less on a percentage basis, but still very healthy action here in credit markets right now, not really diverging or telling us anything unique. If we look here at interest rates and commodities, you can see, take a look at the top 3 rows. Look at the 5-year yield jump 56% this week. So a big move, yields moving up, particularly, again, on that shorter side there, really getting a big jump, but across the curve there, all increasing. Gold selling off this week, one of its biggest down weeks in some time. Same with silver, although silver a little more warranted, just given the fact that it had just kind of completed a parabolic run, and then oil up almost 12% as well. So if we kind of take everything in stride here, we take a look at the report card for this week. It's very similar to what we've seen the last 2 weeks, and that is another A- here. Everything really in check here. Everything that you'd want to see. The volatility environment still a bit of a concern here. Again, a VIX over 25 or near 25 is still something that is historically very elevated, but in terms of equity market performance, market breadth, sectors, everything is still supportive of this market. That does not mean, however, it's a jump in here, right? If you're just tuning in now, if you've been away from the market for months, it doesn't mean that we should all just go in and buy the market tomorrow, because it doesn't speak to kind of where we've come from, the actual path, or overbought or oversold, if we want to use a technical term. So that still is something you need to consider, and we're going to get into that in part 2 right now. So we'll be back in a moment here with some charts and putting all of this into some context. All right, we're back here with part 2. We've got TC2000 open. We are looking at weekly charts. We have our smart trend filters applied to our charts. That's the dotted or the circular colored dots there are the smart trend filters indicator, and the white dashed line is price itself. This is a weekly time frame, so let's jump into it here. S&P 500, you can see surging to the upside this week with that white dashed line going parabolic. Our trend filter here turned positive last week, so we effectively, if you're waiting for this on a weekly time frame, you sort of got your buy signal last week. It was transitioning for a long period of time. We got the transition up last week, and it continues up this week. If we look at the NASDAQ in the top right here, again, you can see moving to all-time highs. We've been a lot more bullish here much earlier. Nothing new has changed from a trend perspective here. We have continued to move to the upside. Bottom left, Russell 2000. Remember, that transitioned up last week as well. We got continuation this week. IWM going fairly parabolic here, up 8% this week. And you can see a little separation and angle there on that trend filter indicator. And the ACWX. So ACWX here, which is the international markets again. So this is world equity markets minus the US. This went positive. It's the first buy signal here from a trend perspective on a weekly time frame since back in the last week of January. So we're finally moving up here into the bullish state. We were transitioning for 2 weeks, and you can see now working itself to the upside. Now, if we go down to a daily chart and we take a look at these trends, a couple of things we'll notice here is, remember last week we talked about just kind of how steady and sideways some of these some of this trend filter was, and you can see how we've started to get a little more oomph to the upside here, a little bit gradual. You can see it more so even with the IWM and the ACWX, especially as some of these dots here are getting a little more vertical, a little steeper in their slope, but that basically speaks to momentum picking up to the upside here in both of these, in both of these markets, specifically Russell and ACWX. But really, daily trend here in all equity markets are bullish. Same thing goes on the weekly, so we got some good trend alignment there on both time frames. Now, if we look at some traditional kind of candlestick analysis here on some of these markets, we were looking at this view here, and this is the last, this is kind of the roadmap that we've been looking at in these videos. And you can see on the downside, this 2940, that was the last big breakout level here that occurred about 2 weeks ago now, back at the end of May. And then you can see we continued to move higher here, and we've basically been, kind of running uninterrupted to the upside. This 3130 was the resistance we last talked about in our past video. This was essentially the highs here from late February when the market had that initial reactionary sort of bounce. And you can see we totally cut right through it with this big gap up today on Friday. We saw the market just essentially jump right above it and then continue to push to the upside through the duration of the session. So we cleared through that area. The next relevant mark now comes to this gap fill back here for the S&P 500, which basically comes in right into 3261 all the way up to about 3360. So if we had to put a percentage on that, we got about 2 to 4% above where we're currently trading is kind of this next, sort of gap fill target. And then you're quickly right back to the all-time highs, right around 3,400 in the S&P 500. Now, those are, that would be the next sort of relevant area that I'd be looking for. So this is the entry to the gap right in here around 3263, and then the gap fills up here right around 3322. So that can give us some next, kind of friendly targets above us. Now, if we kind of look though at this context here, we look at the S&P 500, you've got to realize that we have gotten quite vertical here. We've gotten quite frothy, I think is a good word to use. And if we kind of throw this in conjunction with, say, the IWM, which if we throw on some of the roadmap that we've had here as well, you can see that we are kind of jumping over some of these levels. Was 144 level we talked about. We've kind of settled in at that area for 2 days this week on Wednesday and Thursday, trying to make up its mind on the market. And then we had the big gap up here on Friday, and again, kind of right into the top point of this reactionary bounce that we saw in February. Notice here for the Russell 2000 as well, look at this series of just gaps that are being left behind here. So it all really kind of started back on this day here. This was third week of May, the 18th. Look at this big gap that never got filled. We had another big gap day here. We had kind of I don't know if this was one of these was a bad print, I think, but you had just this, this very jumpy action in here again on the 26th. We had a gap again this week on Wednesday, which we didn't fill, and then we gapped again here on Friday. So you're getting a tremendous amount of overnight movement. And again, you're going pretty vertical here. So in the past 15 bars, you've moved from low to closing of Friday here up around 28% in 3 trading weeks. So that's, again, a good amount of ground covered. And if we, kind of throw that into some of these other markets, and we're going to go out of order here, but if we look at like the Dow, or we look at financials, and we look at energy, right, some of these places that are really kind of squeezing right now to the upside, I think you have to be cautious here in the short term. And we sort of spoke to this last video as well, and this is why overbought conditions and looking at, kind of sentiment here is very tricky to nail down the specific timing, because markets can stay, we've all heard the saying, irrational longer than any individual one of us can remain solvent. So it is very difficult to try and put on a trade just under the assumption that things are overbought. Right. And this is where, if we pull it back to, even just a simple sort of heuristic like this trend filter here, this helps keep you on the right side of the market because, personally, I know for me, with action, with some of the action that we're seeing out there now, if we just look at these weekly bars, we look at this 8% week in the Russell, we look at this, 15% week here in energy, and we look at the same in financials here up 12%. I mean, you're getting some really, frothy sort of squeeze-like movements, or at least that's certainly my intuition and my read on it. That can make you want to just run in and blindly short everything or kind of want to fight this market. But if you have something even as simple as, this trend filter rule where things are heading up, you can't fight that. Or if you have a system that you follow, we follow the Merlin trading system here, that put on two new trades this week, both longs. And so it is tough to, again, fight the emotion of that froth and to have your, inside of your own head to sort of fight the market versus what the market's actually doing. So sort of a long-winded way of essentially saying, trends remain up. Momentum is, in fact, even on the Russell here, increasing. But certainly from an intuitive trader perspective here, I think we have to be careful of the potential sort of late innings froth here and squeeze-like action to potentially be kind of sucking in some of the late participants in this rally and maybe squeezing out some of the shorts that have been in this market for some time. And we may have seen them, we may be in the process right now of eliminating kind of those participants, getting the shorts to cover, getting the late participants that, finally have decided not to miss out and any more of this rally to kind of join in on the long side. And that's ultimately when an actual top can be put in. And again, even if that top is only temporary for a couple of weeks, it's still something that, we can at least keep in the back of our mind and think about, but all is to say, if you are trying to pick a top, if you are trying to short this market, once again, you are going against the dominant trend. So you have to be aware of kind of what you're looking to achieve and your process and your strategy. And at this point here, we've gone way off track of analyzing just pure price action here. So if we get back to script and we talk about some of this action again, I think we did sort of highlight the relevant levels in the Russell 2000, where I guess we left off. As we mentioned, we sort of gapped above these prior levels, and essentially what you have here is it coming and testing, as we saw at the highs of the session today around 152, kind of tested the reactionary bounce here. Looks like it wants to kind of turn around a little bit. Again, most of these markets on Friday did close near their lows. Maybe not so much the SPY. Maybe it was just the IWM. Let's see what the Qs did. Yeah, the Qs were high, so I guess it was really, the Dow a little bit closer near the lows of the session, but I think it was mostly the IWM here that closed near its lows, the SPY and the Qs, kind of holding on to the majority of today's gains. So that, I think, sort of covers what I wanted to at least rant about, I guess, a little bit on the equity markets. If we look at credit here, you can see LQD weekly time frame here, nice bullish trend filter. That's still the same. Junk, we talked about the big move it saw this week. 2.5% is a big move for JNK ETF. Notice, though, we didn't transition up yet, so we're still in the yellow kind of transitionary state here for the high yield bond ETF. So that's something to at least still pay attention to. It hasn't quite confirmed to the upside just yet. If we look at the VIX in the bottom left here, this is the second week in a row now we're in bearish trend on the weekly time frame. And if we look here at TLT, this is the first time that we're moving back to the neutral state here since the end of March. and we haven't seen a bearish sign here, or signal here, since the second week of the year, since January. So basically, TLT has been running uninterrupted to the upside. We're getting a little bit of a test here right now as sellers take a little bit of a run on TLT. So we'll see if that changes next week. But 4.5% to the downside this week, that's a big move. We'll talk about that in just a second. If we look at the daily chart in all of these, you can see again, LQD, both our corporate bond ETFs here are in bullish trends. You can see the VIX on a daily time frame has basically been in a sell signal since the 3rd of April. Nothing has changed here. You can see as it continues to bleed lower. TLT on the daily chart has turned bearish much sooner. Earlier in May is when this went negative, and you can see it continues to turn negative. So if we look here at the TLT from a price action perspective, take a look here at this week's action. Let's just go to a clean board. First here on the weekly time frame, down 4.5%. This is a very big move for TLT. Now, of course, we had some historic all-time volatility here in TLT just about a month ago. So unfortunately, this is sort of skewing our charts a little bit in terms of just looking at this with our eyes. But if you go back in time here, you look at these types of moves, 4.5% is a big one, and you can see this has been kind of bleeding and accelerating lower. Looks like it kind of just rolled off a cliff and picked up some acceleration to the downside. It certainly turned itself around here on Friday. Didn't close near the lows, but certainly this is something to pay attention to here. Maybe the market, maybe the bond market is finally starting to agree with what equities have been suggesting. Maybe the equities got it right this time in terms of leading the move earlier, and the bond market's been a little bit slow. It's tough to know exactly what the real narrative is here, but certainly TLT, and again, you can go across IEF. If you look at the mid 10 years or even the shorter term, you can see all kind of rolling over as rates picked up to the upside. And dollar, which is something we don't usually talk about too much in these videos, but the dollar index here really seeing a big move as well, down 1.5%, which again, we see all the craziness here that happened just a couple of months ago, which was historic in terms of magnitude of move, but generally speaking here, at 1.5% move in the dollar index is a big move, and you can see this is the 3rd week in a row that the US dollar has been selling off. So a couple of big things there standing out, dollar and bonds. If we go to our commodities slide here, you can see gold still holding positive trend here, but it is coming back down and testing this longer term trend. Silver, kind of the same thing. This is due for a little bit of a reset, so nothing changing there. Oil continues to bounce, but you can see that's still in bearish trend. You can see DBC in the bottom right, so commodities ETF starting to test its trend filter and move into a more neutral state. If we look at sectors now, take a look at some sectors. Wasn't a whole lot of change this week. Basically, the things that were already positive trend really continued in positive trend. The things that were neutral pretty much stayed neutral or in transition mode. You can see, some of the right here, this middle row. So energy, which is some of the biggest performers this week. Notice, even despite a 15% move in energy, this is still not budging here. We're still in the sideways neutral transition filter state. Same thing with financials, big move this week, but we're still stubbornly neutral. Same thing with industrials. So again, these were, as we mentioned, the biggest hits to the downside in the first quarter. It's going to take extra time and convincing for them to get back into that bullish trend. So I don't think there were any other changes there. So if we take a look at some of these individual sectors to wrap things out, the ones I wanted to talk about, again, were some of those bigger movers, was the XLE. You can see the XLE here, started to initially respect this resistance here. And we talked about this. I think we even talked about this as a potential short idea as this started to roll over way back here in May. But notice it just didn't really get any traction. It had the initial move down, and then it had this session here, which really couldn't even consider follow through. And then it just rebounded to the upside, stuck like a magnet to 39, and then ended up breaking back out. So you had this false breakdown in here, led to this squeeze higher. here, sort of filled the gap in here. Again, when we zoom out here, it is still horrendous looking from a longer term time frame, but certainly in the short term, if you've been in energy, you made a lot of money this week and the past several weeks. So congrats to all of those that were, kind of riding out here in energy and were brave enough to sort of jump in and accumulate in the lower areas. I still think, again, especially given the move, it's a high risk spot to be in, but we'll see, and that, of course, as we talked about earlier, can certainly continue. Financials also here, again, you can see squeezing to the upside. They closed near the lows of the day, but still very impressive cap up, especially, given the parabolic move that they've seen also in the past, in the past 3 weeks, a 30% move in financials to the upside. And again, if we look left here, there is a lot of supply in here. Back from 2019, a lot of supply in this $26 area. So again, I would want to be pretty cautious here, pretty conservative on financials, and in fact, still, again, out of all of the sectors, still dislike, or I think they're in the most bearish sort of position, right across all different sectors comparatively. Last but not least is industrials. Again, all the biggest movers. Again, over the past 3 weeks here, 31% move to the upside. If we look to the left here, you can see all of the supply that we're coming back into right now. So, if you were a seller in here, if you were accumulating in here in the industrials ETF and you were hoping for a big breakout of this multi-year base, you had a little bit of hope here in early January, maybe got excited and added to the position, and then all of a sudden everything kind of falls through, the bottom totally falls out. So if you held in here, if you're averaged in, or, if you were just stubborn in your positioning and you suddenly got made back whole after this big drop, that's what, kind of that overhead supply term means. And you have just a bunch of sellers or eager longs that are looking to get back to break even that will happily sell, at their break even price. So that's what you have to be careful of here. So XLI, again, very similar to XLE and XLF. I think it's a very tough spot of the market. Certainly squeezed this past week. It can continue to squeeze, but technically, it's not one I would really want to hang too much weight on. So that's it. That is it. A little bit of a longer rant there this week, but hopefully these videos are helpful. Try and touch upon everything and do a real comprehensive kind of look. Again, going beyond price, looking at volatility, credit markets, looking at the dollar, because these things do matter and they are big moves. Especially when you see them this week in context to how they usually move. So that's it from me. Enjoy the weekend. Thanks as always for tuning in and watching. You can subscribe on our YouTube channel or follow us at The Trade Risk. We'll see you back here next week.